USD.AI. Most traders read this chart wrong. One level decides it, trust or trap. And if this helps you, please subscribe. It really supports the channel. Not investment advice. USD.AI 4-hour chart. It already swung up 63.6% inside this window, and most people are reading it wrong. So is this a move you can trust or a trap? One level decides it, and it is already on this chart. This window has a high and a low. One number between them matters more than both. USD.AI opened the week around 0.03. From there, it rallied up 63.6% to the high near 0.05. Then a pullback carved out the low near 0.03. And here is that number. It is holding 67% of that range. Buyers still own the upper half. But charts do not move on their own. Look at what just happened here. This is not a random candle. Something changed underneath. It just cleared its 60-day high on 2.4 times normal volume. That is a structural change. How unusual? Put it next to Bitcoin. Same window, side by side. Bitcoin did up 0.7%. USD.AI did up 39.7%. That is a 39-point gap. Strength against the benchmark is information. Now the structure underneath. Zoom out first. The weekly decides whether any of this matters. On the weekly, the higher time frame is down. Zooming into the daily, the 6-month trend is down. Down on the 7-day chart, higher highs and higher lows overall, but the last swing rolled over. So the bigger trend is down, but price is bouncing. This is a recovery attempt. Direction we have, now the levels, Fibonacci. Anchored high to low. 0 at the top of the move, 100 at the bottom. The key level is the 0.618, the golden pocket. Price is still holding above it, with that zone as the floor to defend. Holding above the golden pocket, buyers stay in control. We know where, but is there fuel, momentum? The RSI on the 4-hour candles. It sits near 65, in neutral territory mid-range. Plenty of fuel left in either direction. The slope matters. Falling RSI confirms sellers. 50 is the line between up and down. One gauge can fool you, second opinion. That is where the MACD comes in. The histogram is positive. Rising green bars, momentum building. When both agree, the signal is stronger. Every piece is on the table, so how does this actually play out? 3 ways this resolves. Bull case, it holds this base and grinds back up. The old highs are too far away to call a level. Base case, it chops inside the range while the market makes up its mind. Bear case, it loses 0.02. Below that, the setup is invalid, no excuses. Which one is it? Back to the question. So trust or trap? On the week, USD.AI closed up 39.7%. The signals are split half strength, half trap. A wait and watch, not a chase. That is the read. Drop a coin for the next one. That is the week. A fresh board and a new name on top are coming. Subscribe so you do not miss which one.